Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, December 2012. Well, a continuation of the trend to the downside today in a candle. It's made a lower high and a lower low and a very large black body candle, a very significant trading day today. This large black body is larger than we've seen for some time for the past week. We had previously a very large black body with a large shadow on the bottom, smaller shadow on the bottom of this one, and this denotes the sellers making strong net bearish progress, and the sellers have actually closed with strong control of this market. Now the significant thing here is the breakout down below the bottom of the cloud, and that is a bearish signal with Ichimoku charts. It's a signal to go short, and it does suggest, especially with this bearish breakout, that the market is destined for lower levels. Now we did also see the market close just down below the 1700 level. We saw some buying coming in as evidenced by the shadow, and I'm not terribly happy with the depth of the close below the 1700 level. There is still potential for the 1700 level of support to exert its influence and trade the market back up towards the top of the cloud here. But I think the size of the body of this candle does suggest that there is strong downside momentum, and we should be looking to some of these minor levels at around 1688 to 1680 for potential support, but then also down below there we have strong support down at 1667. In terms of the Fibonacci extension, we're examining the current first time frame downtrend and its relationship to the previous time the market was trending down, and today the solid bearish breakout down below the 261.8%. The market had been toying with that 261.8% for a couple of the previous 4 or 5 days, and was attempting to rally from there without a change of trend, but today blown it away in a very bearish manner. It does suggest that this market has potential to trade down to the 423.6% at 1679, which coincides, by the way, with this swing high. Previous resistance strengthens the suggestion that this 1679 level will act as strong support for this market. But looking at the Fibonacci extension, and this could be significant, we saw the market toying with the 100% level here, with these 4 or 5 candles testing down below there and not closing with any conviction down below there. But today broke out down below the 100% for an expansion of that Fibonacci retracement. The solid closed down below the cloud and testing just to the 161.8% and rejected from there. So that does suggest that there is potential for the market to rally and change trend. But the fact that we've done that on a bearish candle doesn't really suggest that the market will bounce off this level or change trend. We don't see any bullish activity in this market at the moment, except for this small shadow and the rejection from the 1693. So there is a possibility that if this market does continue trending down, that it could test down to the 261.8% level down around 1655, which coincides with the price rejection that we saw down around here previously from this swing low. Now obviously, in terms of Ichimoku, a bearish market in all 3 timeframes. We have the market trading now below the cloud with a bearish breakout giving us a sell signal, and also at the same time a solid bearish breakout down below the Kijun-sen, and that could be significant. So a bearish market in the medium term timeframe and a bearish market in the short term timeframe by trading below the Tenkan-sen, the green line here. The Chikou span here, if we look at that, it's below the corresponding price action, so it's confirming all of this bearish activity that we're seeing in this market. It does suggest that the market has the potential to test down to these levels in a similar way, similar to this candle here, testing down at least to around the 1680 level and even perhaps beyond, down to 1667.